Good morning, good morning, good morning, good morning, good morning. My name is Sean Jackson. I welcome you back to the Mango Grove. It's been a while. I do apologize. I haven't been able to do a video on my PC for the longest time, but hey, I'm finally back to my PC. And we just closed a weekly, and in a couple of weeks we are going to be closing a important monthly candle too. There's a lot to talk about. We will be coming back on over to the dashboard in a second. I do want to start with the weekly right over here, and the goal for today's video, since there's so much going on at the moment on the charts, right? I know many of you are probably going through analysis paralysis. You guys might be wondering, should I be looking at the weekly? Should I be looking at the daily? Should I be looking at the monthly? Should I be looking at the bi-weekly? So my goal over here is to narrow down what you guys should be looking at. So if you are looking at the weekly, you should be turning off all your indicators. Okay, in my opinion, turn off all your indicators. Don't look at any indicators in the weekly. Simply look at two things. Right over here, you want to look at this level, okay? Right over here at around, let's say, I'm going to zoom in for you guys, 57,800, right? You can see that the most current weekly closed above it, or rather the one we just closed above this level. We are testing it, and we want to see continuation from that level, okay? But that is not as important as going on over to the dashboard. Okay, click on your Mango view right over here. It'll take you to this page over here. Turn on your weekly. Make sure you're on your weekly, on your drop down, okay, looking at Bitcoin. And all you need to do after this is click on your swing lows, swing highs. Okay, that's it. Just look at this. And what you want to start seeing is these lower highs get taken out. Okay, so Bitcoin has a lot of work to do before you can start saying, hey, it is extremely constructive on the weekly time frame. Okay, once we take out this lower high over here, we'll print a high on this chart, and then we are looking for this next lower high to get taken out as well. So these lower highs need to start getting taken out by the bulls. Until then, don't look at anything else on the weekly. Don't look at any indicator. Okay, it will just confuse you guys. Okay, now I will do a live stream and we can dive deeper into the weekly time frame in the coming days, but for now, all you want to look at, if you are looking at the weekly, is simply this level over here for now, okay, and these lower highs. These lower highs are far more important, okay, and again, these lower lows are very important too. At the moment, you guys can see that we have printed a higher low, but we haven't printed a higher high yet. If we get the high low, high high, high low, high high, that's gonna be the initiation of the next bull trend all the way up to around $90,000 to $100,000. Okay. Now going back on over to the actual dashboard right over here. This is looking pretty good, right? Lots of greens. Do not get fooled. If you hit your drop down right over here, Bitcoin on the weekly is still red. 4-day is still red. The 12-hour is green, which is a good sign. The daily is also green, which is a good sign. But I do want to start seeing these mid time frames press on over to the high time frames, right? Seeing the 4-day flip long is going to be a really, really good sign. And of course, we want to see the weekly flip green as well. And I do want to quickly give a special shout out over here to Sui. Look at that. This is so good. We will take a look at Sui sometime later this week. Okay, back on over to the charts right over here. We are looking at the bi-weekly. Now, on the bi-weekly, you do want to look at an indicator, a particular indicator at that too. An indicator that we've been talking about for a very, very long time, since the beginning of the cycle, and that is the bi-weekly dynamic. Now, this is one of our cyclical indicators in that if we do lose this indicator, if we do lose the bi-weekly dynamic, then we are going to be in a position where we need to start hedging our positions. But we are holding the bi-weekly. We closed the bi-weekly right above the level, so we are seeing support. So even if you guys are itching to start hedging your positions, exiting your positions, and just go on a long vacation, you do not have permission to do so yet. We could be doing something very, very, very similar to what we did during this phase. In fact, we can go ahead and quickly draw a comparison, right? Let's say, to be objective as to where this consolidation period started over here, we can use this impulsive candle, okay? This impulsive candle coming in around March. So what I'm going to do is measure from here to where we finally started our breakout, and that's around 196 days. Now we're going to go ahead and place it on this impulsive move, right? This candle right over here, right? So we impulsed and then started consolidation. And what do you know? We are around that period, around the same period where we ended the last consolidation, right? So 196 days from the impulsive move. I'm going to go ahead and quickly show you guys again. 196 days from the impulsive move, right? So it's pretty much the same story, right? Same story. For whatever reason, this consolidation did not feel as worse, right? Because in my opinion, we weren't putting in lower lows. Over here, the consistent lower lows has been grinding on people's psychology, right? We put in a low, a lower low, lower low, and each time lower highs as well. So you guys can see how the charts are mostly there to play on your psychology and how you as a trend trader or support and resistance trader battle that psychological attack during these consolidation phases is what will set you apart from the longer term losers in this market. So you have to choose whether you want to be Mango or you want to be like everyone else in this market, because the big win is right around the corner. In my opinion, I'm holding on to my bullish bias until we see this bi-weekly dynamic lost. And what's our next cyclical positioning indicator, guys? It's a monthly 10 SMA, right? So remember, two of our major cyclical positioning indicators were the biweekly dynamic, or rather not were, still is the biweekly dynamic and the monthly 10 SMA. Where you guys can see that we have a monthly 10 SMA turned on, as well as our monthly dynamic. Now, again, I talked about the monthly dynamic in the previous video. People have asked me why not just use the monthly dynamic. It's worked pretty well. Yes, but the monthly 10 SMA gives us a good heads up, right? Last cycle too, we lost a monthly 10 SMA. Then we consolidated between the monthly 10 SMA and the monthly dynamic. Then when we lost the monthly dynamic right over here, we had a huge impulsive move towards the downside, right? So here too, we can use the monthly 10 SMA as a way to get ahead of the market, right? Because what you can do is essentially use the monthly 10 SMA as your initial trigger to start scaling out of your positions, and then when you lose the monthly dynamic, you can scale the rest out, right? That allows you to essentially have a hedge against being wrong, right? So let's say we lose the monthly 10 SMA, and you see in the previous cycle right over here, guys, okay, what ended up happening was we oscillated between the monthly 10 SMA and the monthly dynamic and then lost it, right? What if we do the opposite? What if we oscillate and then reclaim the monthly 10 SMA? That allows you to still have good positioning, right, to get back into your trade somewhere around here. And then if we do have a move to the upside, you're positioned for that, right? It's a lot easier psychologically. Of course, there's a trade-off. The trade-off is that you're going to have to give up 15% of the spread in case we do break down like this, right? So that decision as to how much you scale out, right? Let's say we lose a monthly 10 SMA on this monthly close on in 14 days. How much do you scale out? 25%, 50%. That's going to depend on how exposed you are to Bitcoin in relation to your personal wealth and how much you're going to need that money for the next like 2 years, 4 years, etc., right? So if you are like 99.95% exposed to Bitcoin, and you see that monthly 10 SMA get violated, you are going to have to scale out more than someone who's just 5% exposed to Bitcoin, right? Maybe if you're only 5% exposed to Bitcoin, you can just wait for the monthly dynamic to get violated before you start scaling out. So it's gonna depend on your exposure to Bitcoin. This is not a one size fits all decision. Okay, so again, going back to this analysis right over here, the monthly 10 SMA, we haven't lost it yet. We closed it above it, so we are flirting with that level at the moment. We have 14 days to go, and if we do close well above it, all is well. We are gonna go back to what we've been doing for this entire cycle, which is holding our cyclical positions intact and waiting for those great leverage trade opportunities to the upside. All right, so to conclude, the monthly 10 SMA is coming in at around, let's say 59,000, somewhere around there. So we want to see a clear close into the, honestly guys, yeah, monthly 10 SMA is coming in at 59,000, right? But I'd rather see a candle close above 60. Let's go ahead and get the actual level somewhere around here, 60,500, right? I want to see a candle close above this level. Okay, that's gonna make me feel a lot better about the monthly close. So until we see something like that, I'm still going to be cautious. If we do lose the monthly tennis way, look straight towards the bottom of the monthly dynamic here at 47,819. It's as simple as that. If we lose a monthly tennis way, you have to look towards these lows getting tapped, okay? Especially if it's a really, really good bearish close underneath this level. Let's say we close at 56,400-ish, right? Underneath this low right over here, I think we're going to go ahead and tap this low over here, and we look towards the monthly dynamic, the bottom of the monthly dynamic at 47,700-ish getting tapped. Okay, over here we're looking at the most important chart at the moment, which is the quarterly chart, and this is so bullish, right? This is so bullish, but it could turn bearish really, really quickly. The key level that we want to be looking at is a level right over here, coming in around. We're testing it as we speak, actually, 58,500, right, somewhere around there. So right over here, I've zoomed in to the chart, and you guys can see that we are testing this key level over here on the 3-month chart perfectly as we speak. So it's going to be very, very, very important to watch how the bulls and the bears battle around these levels, around this level over the next 14 days and 17 hours. We are seeing confluence now between the 3-month chart and the monthly chart. Remember, on the monthly chart, we're looking for Bitcoin to close around 60,500, right? That's going to be a good close. However, if we lose this $58,900 level on the 3-month chart, I would be looking straight towards this level right over here, which is around 46,900, right? And that's going to line up with the monthly not giving us our $60,300 level close and testing the dynamic instead, right? The bottom of the dynamic around 47,518. So we're seeing confluence now between these two charts. So the monthly chart and the 3-month chart are going to be far more important than anything else we look at, right? Of course, the bi-weekly is something that we want to keep an eye on as well. So this entire analysis, guys, can come down to just these charts over here, okay? The bi-weekly, which we're still holding, the monthly, which we are still holding as well, right? Yes, at the moment we're floating around it, but the last month closed above the monthly 10 SMA. And finally, this chart, okay, the 3-month chart, which the key level is going to be these kind of closes right over here coming in from 2021. So yeah, a lot going on at the moment, but this analysis doesn't end over there. We do have the next FOMC meeting in 2 days and 10 hours. Really, really exciting stuff, because right over here, you guys can see that currently the market is pricing in a 60% probability that we get 2 rate cuts, 50 basis points rate cuts in the next meeting, right? And if you zoom in right over here, you guys can see that it was just 1 week ago, where the market was saying, hey, the probability of us getting 2 rate cuts is only 30%. Now they're saying 60%. So the market has changed its mind drastically over the last week, right? Last month, in fact, the market was saying there's only a 25% chance that we get 2 rate cuts, and now 60%. So a huge shift in market expectations right over here. And of course, that is going to affect Dixie, right? Right over here, you guys are seeing this is not a good look. This is not a good look for Dixie, right? So if you are a bear and you're expecting risk assets to crash, you do not want to see this. You want to see strength on the dollar. This is looking like a massive bear flag. And I have the zone drawn out over here. I drew this out like maybe a year ago. I've been waiting for Dixie to break underneath like 99, essentially psychological level of 100-ish for a while. And now it does look like we are setting the story for just that, right? We do break this bear flag, we're looking towards 95, 96, and this is going to be bullish Bitcoin. And I will be expecting Bitcoin to rally from these levels into the $100,000 level. But hey, let's go ahead and see what actually does happen in the FOMC meeting, because remember, market expectations are currently 60% for that 50 basis points hike, right? What if J Powell comes in and says, hey, nope, I'm not going to be doing 2 rate cuts, I'm just going to be doing 25 basis points? Well, in that case, I would be looking for Dixie to actually rally a tad bit over here at the very least, and Bitcoin is likely gonna see some pain. So next 2 days, next week is going to be really, really important. I do apologize again for not being able to be as active over the past 2 weeks. And honestly, guys, over the past 2 weeks, markets were the least important thing to me. But you guys are very, very important to me. And I did try to do an update for you guys via my phone. And hey, I'm going to try to do more frequent updates for you guys. I'll see you guys in the next one. Keep it mango, keep it easy, keep it stress free. The markets haven't really done all that much, but I feel like it's about to get interesting. See you guys in the next one. Ciao.